Good morning, everybody. Uneducated Economist here. So, I really didn't have a topic or a point to bring up this morning. I thought I would just get out here and just talk a little bit. So, one of the things I wanted to bring up was the home builder sentiment that came out. And I had a couple of people come to me and they were like, oh my gosh, did you hear that the home builder sentiment is down? What do you think about that? And I'm like, well, I don't really think much about it because have you been watching The Uneducated Economist? We were talking about that 6 weeks ago. When the mills started closing, and the price of 2x4s had bottomed out, I was calling it. I said there is a definite slowdown taking place in the new construction market. And all people could tell me was like how much new construction they could see going on all over the place. And I was like, yeah, that's the stuff that has taken place. The new is not starting. Okay, that is slowing down. That is slowing down dramatically, and you're now starting to see it in the home builder sentiment. And one of the other big topics out there that people are talking about right now is the dropping of interest rates. It's like the whole world is convinced that the Federal Reserve is definitely going to be dropping interest rates. Not an if, but when. And yet, I look out there and I said, if the interest rates continue to drop, there is a very major issue that is going to come up from this, okay? And it's a very complex, long, drawn-out problem because there's so many inner working pieces to it, okay? Dropping of interest rates is not just going to stimulate the economy. See, it stimulates the economy when the economy has crashed. That's the point of stimulating the economy with quantitative easing in the purchases of bonds, okay? It's a recovery tool. It's not a maintaining tool. And when you use it to maintain, what you end up with is malinvestments. And that's what we're experiencing right now with a lot of companies. I'm sure you guys have heard of the term zombie companies. Okay? These are companies that would not exist if it wasn't for the fact that they're able to borrow money at incredibly low interest rates. And they're taking this money and they're buying back their own stock, which is causing their prices on their stock to increase. Had they not had access to this super cheap credit, they would never be able to pull off this task. And now where are they getting this super cheap credit? They're getting it from pension funds, where a great number of it is coming from pension funds. Because these pension funds are underfunded, okay? And what I mean by underfunded, the amount that they have and the amount that they have promised to pay out has a huge gap. And in order to close that gap, they would either need to cut the benefits, raise taxes, or try and get a better increase on what they have as far as an investment goes with the remaining part of their portfolio. And the only thing that's out there with the super low interest rates is high yielding corporate debt. And this is where they have dumped a lot of that pension fund money into. And the problem with high yielding corporate debt is another way of saying junk bonds. Okay, so now these pension funds who have this high yielding corporate debt is essentially loaning money to these corporations. And these corporations are using that borrowed money to buy back their own stock. So taxes that are used to fund pensions are going into buying bonds that are using to buy back their own stock. So the moment that interest rates begin to rise, all those portfolios of pension funds with all those bonds, the premiums that they get to sell those bonds for starts to drop. So they would either need to hold on to the bond for the entire duration in order to get their principal back plus the interest rate, or take a loss when they go to sell it if interest rates rise. Okay? So this is a major problem. If interest rates drop, those pension funds are going to seek out even more risky assets coming out of those bonds, which is going to feed more into the zombie companies. So I asked my boss, not my boss, I think of him as my boss, but he's been working at the store for a long time, okay? And he's like, I don't know, he's in his 80s somewhere. And he has real estate and he has stocks and stuff like that. And I asked him, I said, hey man, are they going to lower interest rates or not? And he says, no, I don't think so. And I said, why not, man? Everybody else is convinced they're going to lower interest rates. He says, because the economy isn't bad enough yet. Right? See, quantitative easing is a recovery tool. It's not a maintaining tool. It doesn't work like that. So these malinvestments, these zombie companies that are feeding and gorging off of this pension fund debt, right, when they fail is when the new green shoots can start. It's when entrepreneurship is at its finest. It'll take the failure of zombie companies in order to produce the green shoots. But until then, they can't break through. The zombie companies are taking all the best talent. They've taken all the resources. Right? They're sucking these resources, and they're taking all the profits. They're taking profits too. All the meanwhile, they are not a real viable company. If it wasn't for these low interest rates, they would not even be here. So here's another thing that I got to thinking about. If these zombie companies who should not even be here, who wouldn't be here if their interest rates weren't so low, who's to say that somebody doesn't go and take out some credit default swaps on those companies? Buy insurance policies that'll pay them when the company fails. Okay? Credit default swaps are an insurance policy against an investment. And you can buy these credit default swaps against those bonds, even if you don't own the bond. And the higher that these stock valuations and bond, the bigger this bubble gets, the more those credit default swaps can pay off. Okay? So that's kind of one of the things I think about. Why they shouldn't lower interest rates. Because it's going to feed into those zombie companies. It's going to cause pension funds to get even riskier. It's going to cause house prices to go up in price. It's going to cause student loans to get, even more out of hand. Lowering interest rates is not a maintaining tool. It's a recovery tool. Or quantitative easing is, at least. So those are some of the things I guess I think about, on why I feel that the interest rates are not going to be dropping. Not without a significant pullback in the market. If we see it crashing in the market, then I would believe that they would be lowering interest rates and stimulating the economy. But until then, I don't see them using it as a maintaining tool. All it will do is feed the malinvestment. If the Federal Reserve was to go and drop interest rates right now and start filling the sluices with more cheap liquidity, it's going to start causing an issue with the banking system in general. Okay? The whole idea that fiat currency exists, it exists because there's an interest rate that backs it. People are willing to loan money out there knowing that they're going to get a profit in return. Okay? But if that interest rate goes negative, then it gets down to a certain level that it just doesn't have value to it anymore. See, people think, I could borrow this money super cheaply, but the money, it doesn't have any value. That's how come things are getting more expensive. It's easy to get. And when people start recognizing that, it'll flow away. It'll flow into something else. People don't recognize it now. They don't have a concept. It was not taught into people what a dollar is, how it is created, where it goes, how it dies. They don't understand these things. And until people start recognizing it, it's just like, oh my gosh, my dollar is losing value. Like, I can't buy as much with it. My house is, gone to $1 million. But what can I do with it? Nothing. Okay, when people start feeling that, it's over. It's over. Okay? But if they feel the pinch, and they're like, oh my gosh, dollars are really hard to get. This dollar's so strong, look at all the stuff I can buy. Look at how cheap houses are getting. That's adding strength to the dollar. That's adding confidency behind the dollar. Printing up money is like stabbing confidency in the heart. Who has any confidency in a dollar that anybody can get? The fact that you can't get it, to make if it makes it difficult to get, that's what gives you value. All right. You want to give something value? Take something that somebody wants and make it illegal. Okay? Weed used to have value. In Oregon, it doesn't have any value anymore. You have to have a process with your cannabis here in Oregon in order to make any money, but you're not going to make money on flower. There's too much of it. All right? 2 million pounds in excess cannabis grown in this state last year. These are the things that I'm talking about. These are the malinvestments. People went and took out money, built farms, grew weed, and now they can't sell it. They shouldn't have borrowed the money to grow the farm. Right? That was a malinvestment. They had these profits in mind. They had these projections, but yet everybody did it. And now there's so much weed out there they can't make any they're failing. Plenty of demand. I mean, there is no lack of demand out there, but way too much product. Yeah. And money's no different than that. You put way too much money out there and it'll eventually lose its value and it'll be gone. But if you raise interest rates, if you strengthen up the dollar, you create a demand for it. See, people say, no, there'll be too much pain from that. There's going to be way too much pain if you drop the interest rates and those zombie companies grow and they just keep sucking the realness out of the economy, taking all the best talent, taking those resources, taking those profits. All on tax dollar, all on account of it. Tax dollars, funding the pensions, buying the bonds, doing the buybacks. See, that's why I see interest rates going up. We're going to kill off them zombies. Kill off them zombies so new enterprise can start. Entrepreneurs can have a chance. They're not in competition against pointlessness. Anyway, I guess I'll just leave it at that. Uneducated economist, you guys let me know.